All right, get ready because today we're taking a deep dive into Atlassian, ticker symbol team. They're a company making some serious waves in the software world. And you know what? You've sent us some amazing research reports on them. So we're going to break it all down together and see if Atlassian deserves a spot in your portfolio.
One of the things that I find so fascinating about Atlassian is that they've managed to reach a $70 billion market cap. And they've done it by focusing on this seemingly simple idea of making teamwork easier. It really is a testament to the power of collaboration and, the increasing demand for tools that can help teams work smarter, not harder.
Okay, so let's unpack all of this, starting with their business model. Now, it's often compared to Microsoft's Office, but instead of catering to individuals, Atlassian's target audience is teams, and specifically those in software development.
Yeah, that's a great analogy. Just like Microsoft, their revenue comes primarily from subscriptions, organizations paying that recurring fee to access their suite of products. But what's really remarkable is how they've scaled to over $5 billion in annual revenue. And they've done it without heavily relying on a traditional sales force.
So they're not out there like knocking on doors trying to convince people to buy their software.
Not in the traditional sense. They've really mastered this unique self-service model where their products essentially sell themselves. This tells us two things, right? One, their products are genuinely solving a critical need in the market. And two, they've figured out how to acquire customers in a very cost-effective way. And that's a winning combination for any investor.
Okay, so let's talk about these products that are selling themselves. Atlassian has a whole suite of them, right?
Absolutely. From project management with Jira software, which, by the way, NASA uses for their Mars rover missions, to team collaboration with Confluence, to code management with Bitbucket, and more. I mean, their product lineup really covers a broad spectrum of team needs.
So they're not just a one-trick pony with Jira. They've got a whole ecosystem of tools. But in a crowded software market, how do their products stand out?
Well, one key differentiator is their focus on seamless integration. These products are designed to work together, right? Creating this cohesive experience that's really hard to replicate with a patchwork of solutions from different vendors. This stickiness, as we call it, it really helps retain customers and it builds that competitive moat.
Oh, so it's like once you're in the Atlassian ecosystem, you're less likely to switch to a competitor
Yeah.
because everything's already connected and talking to each other. And, they've got that new AI-powered search platform, Rovo,
Yeah.
which is expected to generate significant revenue in the coming years.
Exactly. And that speaks to their commitment to innovation, which is absolutely crucial in the fast-paced world of software. Now let's shift gears a bit and talk about the people behind these products. The management team. Atlassian was co-founded by Mike Cannon-Brookes and Scott Farquhar, two individuals with a really clear vision and a proven track record of success.
And from what I've read, they seem to have this strong focus on company culture and fostering a very collaborative environment, which really aligns with their product's purpose.
That's a really great observation, and it's actually a key strength that I think investors should consider. A strong company culture can be a really powerful driver of innovation and long-term success, especially in a field like software development, where talent is paramount. Their emphasis on transparency and teamwork, it's not only attracted top talent, but it's also fostered this really loyal customer base.
So it's not just about the products, it's about the people and the values they bring to the company. It sounds like they've built something pretty special. But of course, numbers speak volumes in the investment world. So what can you tell us about Atlassian's financial health?
Well, the numbers paint a pretty positive picture. Their financial performance has been consistently strong, with steady revenue growth and improving profitability. They've achieved impressive gross margins consistently above 80%, which highlights their really efficient operations and pricing power.
Wow, 80% is pretty remarkable.
It is, especially in such a competitive software market. And they're not just hoarding cash either. They're generating strong free cash flow and using it for share repurchases, which returns value to their shareholders. Their balance sheet is healthy, with a net cash position, which provides a cushion to navigate those potential economic uncertainties.
So from a financial perspective, they seem to be ticking all the right boxes. Strong revenue growth, healthy margins, shareholder-friendly actions, and a solid balance sheet. This is definitely painting a positive picture so far.
It is indeed, but remember, we've only just scratched the surface here. There's much more to uncover about Atlassian's investment potential.
Stay tuned for part 2, where we'll dive into market sentiment, ownership structure, and risk assessment, including a SWOT analysis. It's going to get even more interesting.
And be sure to check the episode description for links to all the research reports we're using.
Okay, so let's talk market sentiment. Are investors generally bullish or bearish on Atlassian?
Well, Atlassian has consistently exceeded earnings expectations, but, there's a hint of caution in the air. Some analysts believe their stock is currently trading above its fair value, setting price targets around $255 to $260 per share.
So we've got this classic growth stock scenario where high expectations can lead to a bit of a disconnect between price and perceived value. Is this something you think potential investors should be wary of?
Well, it's definitely a factor to consider, but it's also important to remember that valuation is subjective, right? It's influenced by various factors, including future growth prospects, market conditions, and investor sentiment.
Right. It's all about weighing those different perspectives and making an informed decision based on your own risk tolerance and investment goals. Besides potential overvaluation, are there any other factors influencing market sentiment?
Hmm. Competition is a big one. The collaboration software market is fiercely competitive. You've got giants like Microsoft and ServiceNow constantly innovating and vying for market share. Plus, you have these up-and-coming players like GitLab entering the arena.
True. But we talked earlier about how Atlassian has built a strong competitive moat through their integrated ecosystem of products, their user-friendly designs, and their focus on teamwork. These differentiators must count for something, right?
Oh, absolutely.
Yeah.
Their established brand reputation and loyal customer base are valuable assets. However, investors are also keeping a close eye on Atlassian's cloud migration strategy. Shifting from on-premise solutions to the cloud is a smart move for long-term growth. But any major technological transition like that comes with execution risks.
That makes sense. It'll be interesting to see how smoothly they can navigate this transition and how it ultimately impacts their growth. Now let's move on to something unique about Atlassian, their ownership structure.
Oh, yes, their dual-class share structure. This means the founders, Mike and Scott, hold Class B shares. And these shares carry 10 times the voting power of the regular Class A shares available to the public.
So even though they might not own the majority of shares, they still have significant control over the company.
Exactly. On one hand, this strong founder control can be seen as positive, right? It allows for long-term vision and stability, shielding the company from those short-term market pressures. But some investors might see it as a risk to corporate governance because it can potentially limit the influence of other shareholders.
That's a really interesting point. It seems like a double-edged sword. Investors who believe in the founder's long-term vision might find it reassuring, while others might prefer a more traditional ownership structure with equal voting rights.
Precisely. It really depends on your individual investment philosophy and how much weight you place on founder control versus traditional shareholder rights. Now, before we wrap up our analysis, we need to address the elephant in the room: risk assessment.
Right. Understanding potential pitfalls is just as crucial as identifying opportunities. So what are some key risks investors should be aware of when it comes to Atlassian?
Well, we've touched on a few already, like the competitive landscape and potential execution risks associated with their cloud migration. But it's crucial to consider macroeconomic factors as well. A global economic downturn could impact tech spending, potentially putting a damper on Atlassian's growth.
And what about risks specific to Atlassian's business model? Are there any vulnerabilities there that we need to consider?
Well, their reliance on subscriptions for revenue makes them susceptible to changes in customer spending habits. If businesses start tightening their belts and cutting back on software subscriptions, that could directly impact Atlassian's bottom line.
That's a valid point. They also need to continuously innovate and stay ahead of the curve. If their products become outdated or lose their competitive edge, that could spell trouble.
Agreed. That's why it's so important to assess their long-term viability. Can they maintain that innovative spirit and adapt to evolving market demands? One way to approach this assessment is through a SWOT analysis. It's a framework for evaluating their strengths, weaknesses, opportunities, and threats.
Okay, let's break that down.
Yeah.
What are some of Atlassian's key strengths that we've identified so far?
Well, we've already discussed many of them, right? Strong brand reputation, a loyal customer base, a culture of innovation, a diversified product portfolio with a focus on seamless integration, and a visionary leadership team with a proven track record.
And let's not forget their strong financial position, with those impressive margins and cash flow generation.
Absolutely. Now, in terms of weaknesses, their dual-class share structure is definitely a point of contention for some investors. And while their financial performance is solid, the potential for overvaluation is something to keep in mind.
And of course, we can't ignore the competitive pressures from those industry giants we talked about earlier.
Right. But let's not forget the opportunities. Their ongoing cloud migration could unlock even greater revenue streams. And their continued investment in AI-powered solutions like Rovo shows they're serious about staying ahead of the curve.
It seems like they're well positioned to capitalize on the growing demand for collaborative software solutions, especially with their focus on user-friendly designs and a seamless user experience.
Exactly. But we must also acknowledge the threats. Competition remains fierce. A slowdown in tech spending could hurt their growth trajectory, and they need to be vigilant about cybersecurity risks.
Okay, so we've covered a lot of ground in this section, from market sentiment and ownership structure to risk assessment and a comprehensive SWOT analysis. It's clear that Atlassian is a multifaceted company with both significant strengths and potential challenges.
Indeed. This information should equip you with a solid foundation for making an informed decision about whether Atlassian aligns with your investment strategy and risk tolerance.
Now, as we head into the final part of our deep dive, we want to remind you to subscribe to our YouTube channel, Stock Analytics AI, for more in-depth analyses of fascinating companies like Atlassian.
We'll be right back with a brief conclusion and our final, thought-provoking takeaway. Stay tuned.
Okay, we're back and ready to wrap up our deep dive into Atlassian. We've covered a lot of ground, from their business model and products to their financials, market sentiment, and even potential risks. The big question is Atlassian a worthy addition to your portfolio?
You know, it's interesting because based on our analysis, Atlassian seems to align really well with Warren Buffett's investment philosophy. You know, that emphasis on strong businesses with sustainable competitive advantages.
I like that. Let's break that down a bit. Yeah. How does Atlassian actually sit into that framework?
Well, for starters, they've got this really robust business model, right, built on that recurring revenue from subscriptions. And that predictable income stream is like a classic hallmark of a stable and growing business.
Makes sense.
And they haven't just sat back, you know. They've carved out this sustainable competitive advantage through that integrated product ecosystem we talked about, their user-friendly designs, and really importantly, that strong brand loyalty. It makes it tough for competitors to, encroach on their territory.
Yeah, and we can't forget their management team. They're capable, visionary, and they've shown they can adapt to market changes, which is key in the software world, as we know.
Absolutely. And financially, they're firing on all cylinders. Those impressive margins, the strong cash flow generation. It all means they can reinvest in growth A&D return value to shareholders through those buybacks we discussed. Plus, that healthy balance sheet gives them a cushion against, well, any economic uncertainties out there.
Right, and they're operating in this rapidly growing market with a huge total addressable market, estimated at $67 billion, if I remember correctly.
Yeah.
They've hit a $5 billion annual run rate already, but there's clearly room to expand as more businesses embrace digital transformation and, these collaborative work environments.
You got it. But we got to be realistic. There are downsides, like that competitive landscape we talked about, with those big players like Microsoft always on the horizon. And while that cloud migration strategy is exciting, there are execution risks, no doubt.
And what about those concerns some analysts have about their valuation and the impact of that dual-class share structure on corporate governance?
All valid points. We've laid out the information, the insights, the analysis. Now it's about applying your own investment criteria, your risk tolerance, and doing your due diligence.
I like that. We're your guides, but the final call is always yours. Before we sign off, one final thought-provoking takeaway.
Okay, I like it. Hit me.
Atlassian's success isn't just about their software. It's about that company culture they've built, one that values teamwork, transparency, and constant innovation. Those are tough to measure, but I think can be powerful drivers of long-term success.
Couldn't agree more. Food for thought for our listeners. Does their culture give Atlassian a lasting edge in this competitive market?
Exactly. We hope this deep dive has been helpful in your research. And remember, this is for informational purposes only, not financial advice.
Right. We're powered by research and AI, but the investment decisions, those are all yours. If you want more analysis, check out the links to all those research reports. They're in the episode description.
And subscribe to our YouTube channel, Stock Analytics AI, for more deep dives into companies like Atlassian. We break it all down, making investing, hopefully, a little less intimidating and a lot more engaging. Happy investing, everyone.